Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Lewis, and I'm excited to share today's stories with you. We're starting off with a look at the latest market trends. The S&P TIX Composite Index has seen a slight uptick, rising 21.2 points to 24,974.72. Driven by gains in the materials sector, particularly gold, which has increased in price for the second consecutive day. This comes as Canadian investors are digesting the recent meeting between Prime Minister Mark Carney and President Donald Trump, where they discussed trade relations and the Canada-United States-Mexico agreement. While Trump didn't indicate any plans to lift tariffs on Canadian goods, he did seem open to a friendlier relationship with Carney compared to his predecessor, Justin Trudeau. This development has been seen as a positive sign, especially given the intertwined nature of the automotive industry across the Canada-US border. However, uncertainty still lingers, and companies like Ford have pulled their guidance for the year due to the impact of tariffs. In the US, markets moved lower, with the Dow Jones Industrial Average down 389.83 points and the S&P 500 Index down 43.47 points. The Nasdaq Composite also saw a decline, down 154.58 points. This downward trend is attributed to ongoing concerns about the economic outlook and the effects of tariffs on various sectors. The U.S. Federal Reserve is set to announce its next decision on interest rates, with expectations that it will keep its key short-term interest rate unchanged. Despite criticism from Trump, who has demanded a reduction in borrowing costs, the Fed is likely to maintain its current stance. However, market watchers will be looking for any indication of potential rate cuts in the future. As we navigate these complex market dynamics, it's essential to stay informed and consider multiple perspectives. We'll continue to monitor these developments and provide you with balanced insights to help you make informed decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and technology. In our last segment, we explored the latest trends in cybersecurity, and now it's time to shift our focus to the tech industry. Today, we're going to talk about Palantir, a company that's been making waves in the data analysis space. As you may know, Palantir is a Denver-based firm co-founded by billionaire Peter Thiel, and it's known for its work with U.S. military and intelligence agencies, as well as its commercial customers. Recently, Palantir released its quarterly earnings report, which showed strong revenue growth of 39% to $884 million. However, despite this impressive performance, the company's stock took a hit due to concerns about its valuation. With a price-to-earnings ratio of over 200, some investors are worried that Palantir's stock may be overvalued. Now, let's take a closer look at the numbers. Palantir's revenue from commercial customers in the U.S. grew an impressive 71% to $255 million, while sales to the U.S. government increased 45% to $373 million. The company also reported that it closed 139 deals worth at least $1 million, 51 deals worth at least $5 million, and 31 deals worth at least $10 million during the quarter. But what's driving this growth? According to Palantir's CEO, Alex Karp, the company's software is playing a key role in the reindustrialization of America. Karp also expressed support for President Trump's executive order to reform defense spending procurement, which prioritizes commercial products. While some analysts are concerned about Palantir's valuation, others see the company's growth as a sign of its potential for long-term success. As with any investment, it's essential to do your research and consider multiple perspectives before making a decision. That's all for this segment of the Riskwiser Zone. We'll continue to keep an eye on Palantir and other tech companies as they navigate the ever-changing landscape of the industry. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone, folks. I'm your host, Louis, and we're wrapping up another informative episode of navigating the complex world of finance and economics. As we dive into our closing segment, I want to emphasize the importance of staying informed and adapting to the ever-changing landscape of global markets. Today, we've been discussing the latest developments in the trade war, economic indicators, and the Federal Reserve's monetary policy decision. It's clear that the current environment is filled with uncertainty, and investors are eagerly awaiting signals from policymakers to make informed decisions. Let's take a closer look at the recent comments from Fed Chair Jerome Powell and the expectations surrounding the upcoming interest rate decision. As we've seen, futures market pricing suggests almost no chance of an interest rate cut at this week's meeting, with only a 1 in 3 probability of a move at the June 17-18 session. Our guest experts have weighed in on the matter, with some predicting 2 cuts this year and others expecting more. The consensus seems to be that the Fed will take a wait-and-see approach, assessing the impact of trade policies and economic data before making any significant moves. Now, I know some of our listeners might be thinking, Louis, what about the tariffs? How will they affect the economy? Well, it's essential to consider both sides of the argument. On one hand, tariffs can lead to higher prices and reduce consumer spending, which could negatively impact economic growth. On the other hand, some argue that tariffs can help protect domestic industries and create jobs. As we navigate these complex issues, it's crucial to maintain a balanced perspective. We must consider multiple viewpoints, analyze data, and avoid making emotional decisions based on short-term market fluctuations. In conclusion, the current economic landscape is indeed challenging, but by staying informed, diversifying our portfolios, and exercising caution, we can make more intelligent investment decisions. Remember, it's essential to keep a level head, even when the markets get turbulent. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.